Welcome back, Alpha Hunters. Okay, so the market has closed a very volatile week, really, and a very bearish one at that, the week of September 16th. So we will get into what kind of went on this week, what was the big story, where all this bearishness kind of came from. But during the week, 2 p.m. Eastern, I will be live streaming for an hour. So if you do have questions about stocks, my opinion, I can definitely look at it, give you kind of my thoughts, my opinion. Or if you have questions on strategies, different kind of strategies, option strategies, come on by, ask your questions. Let's just hang out for an hour. That's really all it takes. It doesn't take much. I do try to do it in that middle part of the day to help those that, work mostly during the day to kind of get in there on their lunch break possibly and just kind of figure out what the market's doing on the day. So stop on by 2 p.m. Eastern. But as for the week, we definitely saw a lot of bearishness. Okay, so we'll look at the intraday here in a sec. But we were seeing some pretty good bullish activity going into the close of last week. Last Wednesday, Thursday, Friday, saw some green candles come in. Nice bullish activity. And I kind of mentioned, really watch out for these level right here at the 411.50, right there at that low that we had about 3 weeks ago. And basically, we pulled right into that level the first hour of the week right here. First hour just went up, hit right on that 411.50 area or so. We got a little bit above it, actually topped out around 411.73, and then just kind of consolidated the rest of the day Monday. I actually thought this pattern was setting up to be a little bit bullish, maybe a little bit of a bullish push higher, possibly maybe even a gap up on Tuesday before we started selling, but that actually wasn't the case. I did put out in Discord a message just saying, hey, I'm adding to some bearish positions at this level. It kind of makes sense. It came into the level I was kind of talking about last week and the previous week, last week's video. So it just kind of made sense. So we saw that, and I actually put out a short video about that while I was out hiking. And then Tuesday comes out. We got CPI data Tuesday morning, and the data was pretty bad, to say the least. Obviously, you can see that on the stock chart here. Tuesday was a nice little gap down, traded down for a lot of the day. But CPI data came in at 8.3%, and the expected was 8% or 8.1%, depending on who you looked at. So that's not exactly a great number to be seeing. A lot of people were starting to think, hey, you know what? We're going to start to see inflation come down quite a bit, and CPI number. It was down month over month. It was down month over month. I think the previous month it came in at 8.5. So we are seeing it tick down. We're seeing it come down, but they're thinking it's a little stickier. It's going to last around a little bit longer than what they were liking, or like what a lot of economists and investors would like. So we just saw the market kind of gap down, trade down, hang out in the middle part of the day, and I got into my last bearish position on the mic. When I came on the mic, as soon as I came on the mic right here, I just added a little bit more to my bearish positions, and basically I'm done. I'm done adding to my bearish positions. I'm just going to wait until we get to a great profit taking area later on down the line. I'll definitely be keeping y'all updated about that. And then we basically just saw the market collapse as it went into the close, just dropping pretty good there. And it was kind of interesting. We got to an area just above, I would say, the 390 zone, really around that 392 area. And then we even hung out there for a lot of the day Wednesday. We actually broke Tuesday's low just barely by a minute in that first hour or so on Wednesday. And then had a nice little bounce, kind of went sideways for most of the part of the day, and then started rolling lower, and then broke the low Wednesday afternoon. And we tried to rally, and then it kind of extended even into Thursday morning. We did not take out Wednesday's high Thursday morning, traded back down, took out Wednesday's low again, tried to bounce again, rolled back over, took out Thursday's low then in the afternoon. And that was kind of the story. It was just weak after the CPI numbers. It was just weak. Like people, we should have saw some pretty good buying in the 390 area, but we just kept slowly chopping and breaking down and making our way through that zone. And then FedEx came out with earnings Thursday after the bell and basically crushed the market. Then for Friday, most of the market was down between 1.5% to 2% most of the day. So it wasn't good on Friday. and it just kind of mostly hung out. We saw a little late day buying for like the last about an hour and a half, but it was a pretty choppy session. And if we just take a look at Apple here, and you can see how Apple just kept selling down. It was a lot more aggressive selling kind of coming in on Apple, especially on Thursday. A lot more breakdown on Apple Thursday. But we did see a really strong rally on Apple on Monday, but it didn't matter because the selling that came back in on Apple was pretty bearish. But the SPY not looking good. We actually did close and open and close Friday below the 390 level. So on the week, definitely closing below that level is not the best look on the market. So I'll get into a little bit of what I'm expecting out of the market, kind of my game plan maybe for next week, maybe even the next 2 weeks. I do expect a lot of choppiness, but I'll get into that a little bit later. Let's just take a look at the weekly view. The weekly view, obviously, we saw some pretty good bullishness come in last week, but a very light volume week last week. I think most of everybody was just waiting for this week, the CPI data to kind of come in. And look at that bearish engulfing candle getting all the way down below the 390 level. And you can see 390 level on a weekly is pretty crucial. Was a pretty crucial spot, you know, because we had some lower wicks on some of these weekly candles. So getting down here and closing down here, not exactly the most bullish looking chart pattern ever. So I definitely expect us to make a run down into the 370s, the 360s. Eventually here over the next couple weeks to kind of get back down into here, and we'll probably chop around. It's going to be choppy down in there. A lot of people are going to think this is going to be a double bottom type setup, and they're going to try and buy it. We wick below the low that we had the week of June 13th. People are going to buy it. It's going to be choppy. I do think, though, we will break down and just move in the bearish direction shortly thereafter. One of the interesting things, though, you look on the weekly action here on the SPY, and I know it's a lot. There's a lot here. There's a lot going on. But the bearish activity that we saw January and February, it wasn't like the biggest bearish move ever. It was a bit of a bearish move. And then we saw a pretty good rally here in March. And then we saw a really strong bearish move in April, May, and first half of June. And then for the 2 months from mid-June to mid-August, nice little rally back higher. And then we're starting to make our bearish move back down. And here's the thing, as you go into bear markets, you see these bearish moves, you see these bullish retracements, these bearish moves, these bullish retracements. Each one of these bearish moves is typically more violent to the bearish side. Okay, so keep that in mind. So even though we saw how bearish this move was in April, May, and June, I would expect this one to maybe even be more violent just because that's typically what we do see in bear markets. Okay, so just kind of keep that in mind. I would expect, though, a couple of weeks of choppy action, especially if we start to get into the lower ends of the year. I don't think the bulls are going to just give up that zone easily. Okay, but we break through that zone, man. You're gonna see some selling coming in. Okay, so let's take a look at the Qs. The Qs don't look really much better. Yeah, you know, they're going to get down to the lows of this year pretty quick. Tech has definitely been the weakest part of this year. If we just take a look at Apple, Apple was having some major breakdowns, especially today. Look at today's action, today's volume, and a lot of people are like, hey, look at the volume. Look at the extended bearishness. Look at that volume coming in. Maybe we do see some bullishness, but here's the thing. We got below last week's low pretty quick and pretty easily on Apple. So maybe we just retest right into that zone there, and then, you know, we roll back over. Who knows? We'll find out here probably pretty quick what we're going to do. But Apple was definitely weighing a lot on the market, especially after, you know, the hugely bullish day that it had on Monday. Apple was up very strong that day, up 3.85% on the close. And the market, the SPY, was actually up like 1%. The Qs, I believe, are also only up like 1% that day. Yeah, 1.2% on Monday. So, yeah, Thursday was a pretty bearish day as we saw the Qs and Apple both breaking down the previous week's low. The SPY didn't. SPY didn't actually break down previous week's low until we gapped down today on Friday. So, definitely seeing that weakness out of tech. A lot of it's being had from Apple because Apple was down 1.1% on the day. Qs were actually only down 0.6%, with the SPY actually being down roughly about 1.2%. But Apple was down 2% for most of the day until roughly that last hour and a half. But the SPY and Qs weren't down as much. So Apple's definitely having some pain points on the market. So that's something you definitely want to keep your eye on. That's why I've been keeping a lot of my attention just on AAPL, SPY, and the Qs, okay? But as the market kind of makes its way and gets down to this lower area on the Qs, it'll be very interesting to see if we actually do break that June low, even if the S&P 500 doesn't break down or the SPY doesn't break down. If it just kind of gets down there and consolidates, I would imagine the Qs probably get below it, probably doesn't hold below it at first, and probably gets back up, consolidates, chops around, and then we have like a real rollover and continue to push lower. But we'll look at that when we get there. We might get there next week. It might be in 2 weeks. I know there's going to be a lot of activity this next week, especially around Wednesday. Wednesday at 2 p.m. Eastern, the Fed will be releasing its decision on Fed funds rate hikes. Right now, the probability is 75 basis points, but 100 basis points has been getting up there on the probability meter. So I don't think they're going to do 100 basis points. I don't see the need for them to really, but I'm not like a major economist. I don't specialize in Fed policy. But I just think they'll do 75 basis points. That'll just be what I think will probably drive a big catalyst for the second half of the week, okay? But since the Fed is going to be having their interest rate release at 2 p.m. Eastern on Wednesday, I will actually be starting the live stream 10 minutes early that day. So if you do come by the live stream, I will be starting at 10 minutes early on Wednesday. Let's take a look at the dollar, the DXY. Very strong move higher on Tuesday when the market really broke down on that CPI number. Yeah, the DXY looking a little bullish. I know it seems like it's a little extended. We weren't breaking out to new highs. We didn't take out last week's high, but still just kind of consolidating here. It might not reverse out and just reverse down, but just kind of consolidating, moving sideways. It did take out the previous couple day highs on Friday, but I would expect it to eventually start to push higher, maybe probably this next week. The TNX and interest rates, they basically just kept pushing higher this week. Tuesday looks very much like a bullish candle on the rates. Very much looks like the dollar. Just a long bullish candle here coming in. So nice little consolidation pattern. Probably just continue to push higher. We still having higher lows and higher highs. And actually Friday's candle did take out the high that it had back in June. So that is something to be aware of, as we took it out intraday and then we sold off and then just kind of hung out. So I'd imagine we just kind of consolidate and continue to push higher. There's no real reason to see it reverse course. Looking at the inversion yield, obviously we see the inversion yield continue to push more in the inverted territory. So yeah, probably just going to continue to chop around. I don't think it'll take out this low that it established back in the beginning of August, but just probably continue to chop around down here for now, for at least near term, next couple of months. Looking at the GLD had a big breakdown, especially following the Tuesday CPI numbers. We just saw gold just get crushed off of, dollar strength. And then actually the day it actually broke down Thursday, the dollar actually wasn't all that strong that particular day, but gold just had a hard time bouncing off this level. Just kind of been calling that out over the past couple of weeks. Gold's not really bouncing off this level, and we eventually just saw it roll over. So it might bounce here. I'm not really sure. It's kind of tough. I could definitely see it also going a little bit lower, at least on the near term. The HYG, the high yield bond market. So this is what's interesting. The HYG actually did break down last week's low or the previous 2 weeks low, and it actually was looking really strong today off the gap down. We saw some really good buying kind of coming in here on the HYG. So maybe we do see the stock market kind of rally here on the near term or early next week, as the high yield corporate bond market's doing pretty good. At least on Friday it was. We could definitely see some early bullishness next week before the Fed meeting on Wednesday. But this was very interesting, as typically this has been leading the market in any kind of moves, whether it's been bullish or bearish lately. And then taking a look at the VIX, very nice bullish action then on Tuesday, bearish for the stock market, basically taking out the previous couple of weeks highs and even Friday taking out the weekly high today before moving back into the bearish territory. It looks like it's very much just consolidating in a bullish manner, just very choppy, moving up. It's just one of those things, like the market keeps breaking down and this thing is not really spiking. And that's not exactly what you want to see if you're trying to be bullish. You don't want to see this thing just hanging out while the market is just moving in a bearish direction. You want to see this thing spike and just get it over with. That way you can go back to being bullish. But this is just continuing to chop in a bullish direction. And, you just want to see this thing just move up, spike higher, and just kind of get it over with. But we're not seeing that. We're just seeing the market slowly break down and the VIX kind of just very slowly chop in a bullish direction. So taking all that into account, let's just take a look at the SPY, what we could maybe expect this next week. So we already see the market's up Friday after hours, up a decent amount, actually. It's pretty interesting. I got two scenarios. One is we could definitely go bullish early next week, and maybe we do push up. I don't think we will take out 400. Maybe we get to like the mid 390s, and then Wednesday happens, the Fed comes out, announces their decision, and then we just get back to selling. Okay, so that's one possibility. The other another possibility about the bullishness is maybe we just retest into 390 and then we roll over. Okay, do something like this and just roll over. One of those two, that would be like the bullish case for early next week. I'm not really sure. Kind of interesting is I can see a lot of people trying to buy this dip as we broke down the previous couple of weeks, trying to come in, buy it up, and then the Fed comes out, and then like that's the catalyst, kind of keeps pushing the market lower. The other one is, we go bearish into the 380 level, and then this is the one I'm kind of more thinking along the lines that we'll see. We get down to 380 probably on Monday, and then we see some bullishness come in. We start to see the market maybe second half of the day, Monday turn around, go into Tuesday a little bullish, Wednesday maybe a little flat, just kind of hangs out. And then Wednesday, when the Fed announces they're going to do 75 basis points, not 100, the market's like, oh, okay, they're going to do 75. The market pops higher right here into that 390 level, and then rejects that retest at 390 and then starts to roll back in the bearish direction. So that's kind of what I'm thinking, at least for what's kind of happen this next week. The one I'm thinking is we just kind of go lower and then pop off of the Fed decision to 390, and then we can continue lower a little bit. So that's kind of what I'm thinking this next week. Now, I'm not really sure. I'm not really going to adjust anything. I don't feel like I need to adjust anything. I could definitely see us, just looking at the weekly chart. This is a hugely bearish candle, so I could definitely see us retesting into the halfway point or so of this past week's bearish candle, which would be, roughly in the mid 390s or so. I don't think we'll get back above 400 before we start to push back in the bearish direction. But it's just interesting. There's a lot of things kind of going on right now. And the more news we kind of get, it's just the worse it kind of continues to be. So yeah, if you're not bearish right now, it's going to be painful, and I do get that. But if you have any questions, feel free to drop me a line. Let me know in the comments. Stop by the live stream. I'll try to see if I can help out in any way I can. If you want to try to better protect your portfolio or whatever that is. But yeah, expect more bearishness. This breakdown to 390 was not a great thing for bulls on the market. And you could definitely see, looking intraday, the bulls kept trying to fight. They kept trying to buy the dips. Anytime we got below the previous low, they kept trying to buy it up. And then we just broke through. And that's typically how it goes. We just break through and it just snaps. All that buying that was sitting at that level just gets snapped up. So we'll see what next week kind of holds, but I do expect next week to be kind of choppy and just all over the place. There's not much structure to kind of set up here. It doesn't really look as clean. I could definitely see us bounce to 390, then roll over, maybe bounce to the mid 390s, roll over, bounce down to 380 early in the week, and then have a midweek rally up to 390 and then roll over. So there's a lot of different levels and things to kind of watch out for. But make no mistakes, I do think here over the next like week or two, we'll make a run down to the lows that we have for the year down in this blue box zone. Just be mindful that it's going to continue to probably hurt if you have a 401k out there and you have to be invested. It's just going to hurt, you know. Probably just want to stick your head in the sand. There's not much you can do if you have a 401k, but best of luck to you. Hopefully it doesn't hurt too much, and you know, let me know if you got any questions. So I do have those live streams going 2 p.m. Eastern every day the market's open, and on Wednesday I will be starting it 10 minutes early. So if you do have any questions, you know, come on by and let's talk about it. But for now, y'all have a great weekend. Alrighty, take care, Alpha Hunters.